Welcome to this week's Cattle Call, being brought to you by the Home Agency. I'm Susan Littlefield. Another interesting week. If we looked at the way the market started out the week, you might be scratching your head midweek hoping to see some positives. Well, we saw really cash making the big difference. We're really going to focus on that to start out with, and really what happened with the trade of Tuesday to influence what we saw on a Wednesday market trade. Also, we talk about those cattle to the south. How are they doing compared to those in the north? Lots of details to look at on this week's report. As you can see, Brad Kooima is joining me once again with Kooima Kooima Varilek out of Sioux Center, Iowa. So I guess we do have to start out, Brad, talking about the fact that cash has really made a big difference in what you're seeing in the trade this week.
Well, I certainly think it has, Susan. And again, thanks for having me on. It's always fun. As an old true blue fundamentalist, I'm always kind of happy when it feels like the actual fundamentals, like the cash market, seem to have an impact on our futures market. And I certainly think that's the case here again. Yesterday here in my backyard, there was some 186 traded, which is fully $1 higher, 1 to 2 higher than last week, actually. And I think that was maybe a bit of a surprise on a Tuesday already, and higher was certainly pleasant. There was some more of that 186 traded, I know, in Northeast Nebraska this morning as well, which would also be 1 to 2 higher for that area. So I think that bit of solid cash news. We've been a little softer the last few weeks on cash. We come off that 190 high back to here. Certainly a level that's still very, very attractive, and a very nice level, of course. So yeah, a nice start here, I thought, with an early week stronger cash market for sure, Susan.
Well, we looked at the way the trade was even Monday into Tuesday after such great numbers seen last week. There might have been thinking that would be but Wednesday kind of showed things up a little bit different.
Well, we had a little bit of a crossroads here yesterday in a way, and what makes the markets do something on a given day, for me, is impossible to explain or predict. But yesterday was a little bit of a disturbing day if you're a chart person, if you're a technician. We had an outside day reversal down. In other words, outside day, higher highs, lower lows, and lower close than the previous day. So, today, so a reversal. I got asked that question a fair amount this morning, Susan. What do you think of that big reversal down? Is that it? And I reminded a few of them that there's some things that define a reversal, and whether it's real or not. And one of the things that we didn't do, thankfully, today was a reversal needs to have follow through the following day. So, if you were bearish this morning because of the outside day reversal down, you got to go home a little disappointed. We come opened lower and then come ripping right back. Sometimes I wonder if we sometimes the keep it simple method is effective. In my own mind, I always kind of feel like if a market can trade 3 days against its last trend, in other words, we're in an uptrend, right? So if we can have more than 3 down days, then maybe you should, hey, wait a minute, maybe this thing we got to check this out. Maybe we aren't in an uptrend anymore. Today would have been the 3rd down day, so I kind of have a bit of a smile on my face because I'm bullish and I like it when the market's going higher. That we opened lower and then they weren't able to keep it down there. So I don't know. We talk a lot about the funds. Overall open interest in the cattle is not large. We took a pile of open interest out of the market during August, if you remember. And so, I only bring that up because, sometimes people will say, well, who's going to buy it up here, Brad? The funds would be my number one choice. They are very pragmatic. If it works to sell it, i.e. the corn, they'll keep selling it. If it works to buy it, they have a tendency to keep buying it. The other person that might buy it up here is someone that's short. And we haven't really seen that last blast, that short covering, get me out, type of a blow off phase of the market either yet. So I don't know. Obviously, high price, use your head. We're in the cattle feeding business to make money. Think about taking a look at put options and things like that. But boy, for the day and the here and the down, we couldn't have hardly acted better than we did today, Susan.
Well, you talked about the shorts. Are they ready then at this point to give up with this trade? Maybe.
Boy, I don't know. I wish I could predict that. I would think that they'd be feeling a little, snug in the collar. Particularly after today, where I think they thought, okay, that's finally it. They're going to break the market, and the feeder cattle are lower, and all this other stuff, and then have both of those things come back pretty salty. I don't know. I would say if they're a hedger, hopefully they've got the discipline that if they like their hedge when they put it on, they'll still like it now. But some of the other speculative trade, I gotta be wondering if they're not checking their whole card a little bit to see what the reasoning is here for them to stay in that position.
So are we going to continue? I mean, we saw big kills on Tuesday. Don't have the numbers yet for Wednesday when you and I are talking. Could we still see this throughout the rest of the week?
Yeah, I believe it was 126 today. So
Okay.
it which is a solid number. You know, and the you know, I guess I resist to be too cocky because I don't want to set myself up here, but you know, we're not to the tight numbers. 127 yesterday, another big kill today. What happens when we start to kill the tight numbers that I think we're going to have in the first quarter? I think you've got, you know, maybe now the Packers lost. He had pretty good black ink for a little while. We may have shrunk that down to where there's not a big margin for him right now at this moment. But I got to believe the Packers got a real conundrum. You know, if he cuts kill too much, I think he's worried about losing his workforce. I think that coming out of COVID, that perspective that changed, you know, an employer has to be pretty real. And so he may be forced to kill whether he exactly wants to or not. Now, he'll do his best to try to get his arms around it. But it appears to most of us here that part of the reason that they're killing so big is they've got meat sold out in front of them. And that's a positive thing too. So I don't know, you know, be careful, but I really think that it looks like the sprocket's still got the chain running the right direction here, you know,
So how did the Southern cattle look at this point?
Well, I've been a little bit surprised that they've caught up to us this quickly. You know, you still got a choice select spread that's very wide, unseasonably wide. Should reward a place that has more choice, which I think is the North. But I think what we're seeing is we're seeing a, you know, a bit subtle, but we're seeing a shift in the regional supply cattle. And that is that the North is going into their little bit of a seasonal uptick. And I don't mean a big change at all, but a slight increase in the numbers here, which would be typical of a long-fed farmer feeder type deal like we'd have up in my part of the country for sure. And we're going out of supply in the South. You know, I've heard several instances where packers that are located in the South, say in Kansas, reaching up here into Nebraska and Iowa even and buying cattle and dragging them down to Kansas. Well, if there was too many cattle there, I guarantee you they wouldn't be paying the freight to take cattle down from here. So I think a lot of it is just the balancing or the rebalancing of the overall supply, which is getting the South a little closer.
We're taking a quick break in the middle of Cattle Call to talk a little bit of cattle information for our cattle producers. And joining me, Ben Rand from the Home Agency. And Ben, as cattle guys and gals are looking into fall and beyond, what are some things that you guys at the Home Agency want them to be thinking about?
I think first and foremost is we got to look out for the cow-calf operator when we're talking about looking forward to next year's cattle. For these fall calvers, we want them to get active. They need to be active sellers here. We're looking at 273, 74 for August feeders next year. That is a lucrative number. That is a number that needs to be protected. And I think we have an opportunity coming forward to really get our inputs down, specifically with regards to corn. We're seeing pasture come back, being green. We got a lot of great pasture that's come back. Hay prices have settled down. I think if you're looking forward to the fall as a cattleman, focus on your inputs, focus on your corn, and then protect some of these 270 numbers on the feeders.
So having this conversation with you guys is as simple as picking up the phone and scheduling a meeting. How do they go about doing that?
You can find me on Twitter. I'm at BenRand10. You can follow me, DM me, message me. You can call our home office, 1-800-245-4241. We love to talk cattle. We do it every day from 3:30 till 10 o'clock at night. We start back up usually about 6 o'clock in the morning.
All right. Give that number one more time.
1-800-245-4241.
So what about consumer? A few weeks ago, you and I were talking about, it seemed like the trend was moving to more hamburger, getting away from those pricier cuts. Do you still see that continuing into the fall?
For now, it certainly is. Absolutely. The demand for grind is crazy, off the charts when you talk to people that are in that business. And I do talk to a few of them, almost literally to the point where they have a hard time accessing enough cows to get that, the 90s. So I guess we take demand however we can get it. Now, this would not be the first time that you would see a little downplay in the middle meats, you know, the strips, the loins, the ribeyes, that stuff. As we shift out of that summer grilling type season. But then it isn't too long where, you know, we start to talk more like the holiday deal, right? Where then there's a little more emphasis on it. So, but I would guess that the grind will probably carry the cutout here for a little while longer. And there could be a function of that a little bit if we'd ever slow this cow kill down a little. My goodness, 3 years of it, and it is starting now. The beef cow slaughter is starting to slow up a little bit, and I don't know if anybody noticed that milk's gotten quite high. You would think maybe that would slow that dairy kill a little bit. We shall see. I remember talking about that with a good friend of mine in 2013 when that milk finally took off a little bit. Thought, well, maybe they'll finally quit killing cows. And then, of course, 2014 when we went to $1.70 on the cattle. So still got a lot of things that I like about the macros of the cattle market. Had the Fed announcement today. Looks like the sun's going to come up again tomorrow. I mean, even though they're going to leave the rates the same, right? But yeah, there's always something that can change it. But I would say let's stay current, because that's the thing to me that'll change the market first. That would be if we decide to try to overfeed the cattle. So let's not do that. Let's stay current.
All right. Lots of great stuff as always. What are the best way for folks to get a hold of you?
Take a look at us, kkvtrading.com. That's easy to find, kkvtrading.com, and whatever else you need to know, you can find on that website for us too.
All right. Brad Kooima has been joining us this week. As we always remind you, commodity futures and options do involve a substantial risk of loss not suitable to all investors. And that's been this week's Cattle Call on the Rural Radio Network.